Let's break down the profit and loss statement, or P&L, into something everyone can understand. Whether you're a student, a working professional, or managing a household, the P&L isn't just for business owners or accountants. It's a tool that can help anyone make smarter decisions with their money. Think of it as a snapshot of your financial life, showing exactly how much money is coming in, how much is going out, and what's left over at the end. Understanding a P&L is like having a superpower for personal finances. It gives you the clarity to spot patterns, identify wasteful spending, and find new ways to save or invest. It's the secret language of money, revealing opportunities everywhere, whether you're running a side hustle, planning a vacation, or just trying to make ends meet. Think of it as a financial report card for your life. Just like grades in school, your P&L shows you where you're excelling and where you need to improve. You have money coming in and going out every month. A P&L organizes this flow, making it easier to track your progress and set realistic goals. It helps you see beyond your bank balance to truly understand your financial health, so you can make informed choices about spending, saving, and investing. If you ever plan to invest, knowing how to read a company's P&L is crucial. It's the first step to evaluating whether a business is worth your hard-earned money. The P&L tells you if a business is actually profitable before you invest, helping you avoid costly mistakes and spot great opportunities. Mastering this simple concept is a powerful step toward financial freedom, giving you the confidence to take control of your money and your future. A profit and loss statement is a financial report card. It shows how much money a business made and spent over time. Unlike a bank statement, it tells a story of financial performance. It summarizes financial activity into key numbers. Imagine a lemonade stand. Revenue minus costs equals profit. Businesses do the same, just with bigger numbers. It's also called an income statement, showing if there's a profit or loss. For most, the P&L is the most straightforward financial statement to understand. Every P&L statement, or profit and loss statement, is built on three essential pillars that form the foundation of any business's financial story. These pillars are revenue, expenses, and profit. Each one plays a unique and crucial role in understanding how a business operates and whether it's thriving or struggling. Revenue is the total money a business brings in from selling its products or services. It's often called the top line because it appears at the very top of the P&L statement, showing the business's earning potential before anything else is considered. Expenses, on the other hand, are all the costs a business must pay to keep running and to generate that revenue. These include everything from rent and salaries to supplies, utilities, and marketing. For example, in a coffee shop, expenses might include the cost of coffee beans, milk, cups, and other ingredients needed to make drinks. Salaries for baristas and staff, as well as rent for the shop space, are also major expenses that must be paid every month. Profit is what's left over after all expenses are subtracted from revenue. This is known as the bottom line, and it tells you whether the business is actually making money or not. A positive profit means the business is successful and sustainable, while a negative profit or loss means the business is spending more than it earns. Revenue shows potential, expenses show reality, and profit shows results. Sometimes a business can have high revenue but even higher expenses, which leads to losses despite strong sales. This is why controlling costs is just as important as increasing sales. On the other hand, a small business that keeps its expenses low can be very profitable, even if its revenue isn't huge. Smart management of both income and costs is key. To truly understand a business's financial health, always look at all three pillars: revenue, expenses, and profit together. This complete picture helps you make better decisions for the future. To really understand how a profit and loss statement works, let's walk through a simple, real-world example: a lawn care side hustle. Imagine you're starting out, just you and your mower, ready to earn some extra cash on weekends. You manage to mow 10 lawns, charging $50 for each job. That means you bring in a total of $500 in revenue. This is the money you actually collect from your customers for your hard work. But, of course, Running even a small business comes with costs. You spend $50 on gas to keep your mower running all week, and you invest $20 in printing flyers to advertise your services around the neighborhood. Plus, you need to replace a worn-out blade, which costs you another $30. These are your direct expenses, costs you can't avoid if you want to keep your business going. When you add up all your expenses, gas, flyers, and the new blade, they total $100. This is the amount you had to spend just to operate your business for this period. To find your profit, you subtract your total expenses from your total revenue. So, $500 in revenue minus $100 in expenses leaves you with $400 in profit. This is your reward for your effort and risk. That $400 is your net income, the actual money you get to keep after covering all your costs. It's a clear measure of your business's success for that period. Whether you're running a small side hustle or a large corporation, the structure of a P&L statement is always the same. Every business, no matter the size, follows this basic formula. The P&L statement clearly lays out your revenue, your expenses, and your profit, making it easy to see how your business is performing financially. Remember, the logic is simple. Start with your top-line revenue, subtract all your expenses, and what's left is your bottom-line profit. This is the foundation of understanding your business's financial health. The P&L is a tool for decision-making. Analyze expenses. You spend $20 on flyers for 10 customers. Try cheaper advertising to lower costs and increase profit. To grow, increase revenue or decrease expenses. Raise prices or mow more lawns to boost revenue. Business owners use P&L to identify high expenses and find savings. Investors compare P&Ls to choose better managed companies. A P&L replaces feelings with facts, guiding personal and business finances. Remember, a P&L shows what you earned minus what you burned to see what you've learned.